We recently discovered that a prior preparer didn't track basis of non-deductible traditional IRA contributions, Form 8606, for the past 15 years. Yeah. God, somebody's got a project, huh? Therefore, he didn't properly claim the non-deductible portion of traditional IRA distributions in subsequent years. The refund statute on some of those distributions is closed. I will be submitting the Forms 8606 for those years, missed years. Now remember, the 8606 is a standalone form, so that's no big deal. You don't, just get the right year that you're doing it. Since all the prior year distributions so far have been fully taxed, can I retain the basis up through the years that are still open and use that to determine the non-taxable portion of 23 and 24-hour distributions, or is that basis lost? And when I submit the old 8606s, do I treat them as if the client claimed a non-taxable portion of the distributions on his return for those closed years? We really can't even make this stuff up, can we? LOL. I'm throwing that one to the table. Anybody want to try it?
Can I phone a friend, Michael? Michael's going to have that answer. I do not know this for a fact, but I'm assuming the previous years, like depreciation allowed or allowable, I'm thinking that the basis for that portion is going to be gone. You have to go back and recalculate, but this strictly, ladies and gentlemen, is my guess. And I don't know for sure.
I would say that's the conservative approach, but would the IRS actually catch it?
Well,
I was waiting for that.
Ty, no, we can't go there.
No. But seriously, I would say the most conservative approach would be to assume it was taken and only use what would have been allocated for the open years.
Recalculate each year.
And just say, well, this would have been for that year, but it's closed. And I mean, that to me, so they could at least get the 23 and 24, I would do the recalcs. But I can't see them getting anything for the previous years.
22 is still open. So 22, they could do an amended return.
They asked for 23 and 24.
Well, 23 and 24, I'm assuming they're working on the filing. Now, Jeff.
My gut reaction is, can we use 481A for this or not? Because if we could use 481A and just do an adjustment forward, then that solves a lot of the problem. I don't know if we can do that on a basis for a non-deductible IRA.
I would have, okay. We'll take this question from the peanut gallery here.
Not a question.
Mike, please. It's on. They just have to turn it on in the booth.
Okay. Not a question as much as would a 3115 work in this situation?
Well, that's what he was talking about, the 481A adjustment. And I'm wondering now, this is not going to fall under that list of 400 or 500 automatic adjustments. This is going to cost the taxpayer money because they're going to get IRS approval. So it's a $20,000 hit just for the approval. How much are we talking about? We have to take that into consideration. The other option, I was going to ask you, Jeff, would a private letter ruling?
Which is also a $25,000. So, I mean, it's really, a lot of it's going to come down to how much in missing basis we're talking about, which probably is going to be the starting point of this, because if our missing basis is like $150 here, $150 there, your fee to handle this is already going to exceed the value coming out of this transaction.
Now, with that said, AJ, would you recommend filing all those back 8606s? And then tell my client to go back and try to recoup the money from the prior preparer that you're charging them for those.
So first off, I would agree with you. The 3115, it would not be an automatic. It's not one of the automatic procedures. Two, I would go back and calculate to get the 2022 number. I'd go back and calculate the 8606 moving forward of what should have been, and then I would say, okay, and then throw up approximately with the taxes, and then go back to the prior preparer and say, you missed this, let's make a deal. I mean, we could sue you or we can settle for it. But I think you go back and you calculate it so your 2022 is a correct number going forward.
And I think at this point, once you have that number, you're probably going to have to bring in counsel, and your client's going to have to bring in counsel who's going to be able to advise them whether the statute's even still open as relates to the prior preparer, because that may come into play as well.
Yeah. And they didn't say how old the person was or
Well,
how
they're
many years
collecting
they
now,
took
so
traditional distributions, though, because how many years were distributions actually even taken out of that time?
we didn't get all that information.
Yeah, so that kind of, it seems like the math isn't even mathing to do much about it unless we have real numbers.
At this point of the game, I think the best suggestion that we've come up with was, yes, do the work, figure out the numbers are, and then decide from there whether or not it is beneficial. But to try to get that now, it's out of statute. I can't think of any way to get that back into statute.
Unless you can prove the client's financially disabled, which is a major uphill battle.
Yeah, I would have to agree with that one. So that was a good question.
Tax Talk Today, the tax show for the tax pro, is the innovative educational program presented in collaboration with the IRS, designed exclusively for today's tax practitioner.
There's various loss limitation rules we need to be aware of when we have a business activity.
Each program features in-depth panel discussions with key IRS executives and leading authorities from the tax practitioners community. Tax Talk Today features real-time interaction. Innovative and easy to use, Tax Talk Today is the only program that brings the IRS directly to you. Tax Talk Today can be viewed in large groups in the office or from the convenience of your home. To get continuing education credits for watching a program, purchase your CPE credits today. Tax Talk Today, the tax show for the tax pro.